In this video, we'll be going over IRS Form 8582, Passive Activity Loss Limitations. This is a 3-page document that you can find on the IRS website. We'll briefly go through the document, we'll cover some administrative items, and then we'll go step by step into the instructions. So Part 1 is previous year's passive activity loss. Please note that you need to complete Parts 4 and 5 before you come back to Part 1. In Part 2, this is the section for special allowance for rental real estate activities with active participation. Part 3, total losses allowed. Part 4 is required to be completed before completing Part 1, lines 1A, 1B, and 1C. We'll cover this momentarily. On page 2, Part 5 is required to be completed before Part 1, lines 2A, 2B, and 2C. Part 6, if Part 2, line 9 contains an amount, we'll go through Part 6. Part 7 contains allocation of unallowed losses. Part 8 contains allowed losses. Part 9 contains activities with losses reported on 2 or more forms or schedules. Going back to the top, we'll cover who must file, possible exceptions, and the purpose of this form. IRS Form 8582 is used by non-corporate taxpayers to figure the amount of any passive activity loss for the current tax year and to report the application of prior year unallowed passive activity losses. A passive activity loss occurs when total losses, to include prior year unallowed losses from all passive activities, exceed the total income from your passive activities. In general, passive activities include trade or business activities in which you did not materially participate for the tax year, and rental activities regardless of your participation. Passive activity losses cannot be used to offset income from non-passive activities. However, there exists a special allowance for rental real estate activities that may allow some losses even if the losses exceed passive income. Passive activity losses not allowed in the current year are carried forward until they're either allowed against passive activity income, against the special allowance if applicable, or when you sell or exchange your entire interest in the activity in a fully taxable transaction to an unrelated party. IRS Form 8582 is filed by individuals, estates, and trusts who have passive activity deductions to include prior year unallowed losses. However, there are exceptions where the taxpayer may not have to file Form 8582. These exceptions include rental real estate activities with active participation, which are the taxpayer's only passive activities. The taxpayer has no prior year unallowed losses from these or any other passive activities. Your total loss from the rental real estate activities was not more than $25,000 or $12,500 if married filing a separate return. If you are married filing a separate return, you lived apart from your spouse all year. If you have no current or prior year unallowed credits from a passive activity. If your modified adjusted gross income was not more than $100,000 or $50,000 for married taxpayers filing separate returns. Or you do not hold any interest in a rental real estate activity as a limited partner or as a beneficiary of an estate or trust. Activities that are not considered to be passive activities. 1. Trade or business activities in which you materially participated for the tax year. 2. Rental real estate activity in which you materially participated if you were a real estate professional for the tax year. You're only considered a real estate professional if 1. More than half of the personal services you performed in trades or businesses were performed in real property trades or businesses where you materially participated, and 2. You performed more than 750 hours of services during the tax year in real property trades or businesses where you materially participated. 3. A working interest in an oil or gas well. 4. The rental of a dwelling unit you used as a residence if Section 280A(c)(5) applies. This section applies if you rented out a dwelling unit that you also used as a home during the year for a number of days that exceeds the greater of 14 days or 10% of the number of days during the year that the house was rented at a fair rental price. And 5, the last exception is an activity of trading personal property for the account of owners of interest in the activity. Personal property for purposes of this rule means property that's actively traded, such as stocks, bonds, and other securities. For more information about real estate activities, rental activities, and material participation, please refer to the form instructions. At the top of this tax form, your tax preparation software will auto-populate your name and identifying number, whether that is your social security number or a taxpayer identification number. You will use Part 1 to combine the net income and net loss from all passive activities to determine if you have a passive activity loss for the tax year. You'll use Parts 4 and 5 first to determine the entries for lines 1 and 2 as follows. Part 4 is for rental real estate activities with active participation. And then Part 5 is all other passive activities. So before we go to Part 1, we'll proceed to Part 4, where you would list the name of each activity, the current year's net income from line 1 alpha, the net loss, line 1B, prior year's unallowed loss, 1C, and then an overall gain or loss, either in column D or in column E. For example, a Schedule E rental activity has current year profit of $5,000 and a Form 4797 gain of $2,000. You would enter $7,000 in column A. In Part 5, you will complete this section in a similar manner as Part 4, name of the activity, net income, net loss, unallowed loss, overall gain or loss. At the bottom of both Part 4 and Part 5, you'll combine net income, net loss, and prior year unallowed losses. These are the numbers that you will enter on lines 1A, 1B, and 1C, or 2A, 2B, and 2C, respectively. This is the total for part that will be entered into Part 1. So when we scroll back to the top of Part 1, you'll see that Part 4's calculations of net income, net loss, and previous year's unallowed losses. You'll combine those and come up with a result on line 1D. You'll do the same thing for lines 2A, 2B, and 2C. And then you will combine 1D and 2D. If this line is 0 or more, you should stop here and include this form with your return. All losses are allowed to include any prior year unallowed losses that you entered on 1C or 2C. You will report the losses on the forms and schedules normally used. If line 3 is a loss and line 1D is a loss, you will go to Part 2, which is the section for a special allowance for rental real estate activities with active participation. If line 1D is 0 or more and line 2D is a loss, you will skip Part 2 and go directly to line 10, which is located in Part 3. Let's assume that you do have a loss in line 1D, and this forces us to complete Part 2. Enter all numbers in Part 2 as positive amounts. And there exists an example in the form instructions. So for line 4, you'll enter the smaller of the loss on either 1D or on line 3. On line 5, you will enter $150,000. If you are married filing a separate return, you will enter $75,000 if you lived apart from your spouse at all times during the tax year. On line 5, you will enter your modified adjusted gross income not to be less than 0. According to the form instructions, you should combine all amounts used to figure adjusted gross income, also known as AGI, except for the following. 1. Passive income or loss included on IRS Form 8582. 2. Any rental real estate loss allowed to real estate professionals as defined earlier. 3. Any overall loss from a PTP. 4. The taxable amount of Social Security and Tier 1 railroad retirement benefits. 5. Deductible contributions to traditional IRAs and Section 501c18 pension plans. 6. The deduction allowed for the deductible part of self-employment taxes. 7. The exclusion from income of interest from Series EE and I U.S. savings bonds used to pay higher education expenses. 8. The exclusion of amounts received under an employer's adoption assistance program. 9. The student loan interest deduction. And 10. The deduction allowed for foreign-derived intangible income and global intangible low-taxed income. As an example, your adjusted gross income on line 11 of your 1040 or 1040 SR is $92,000. Of that, you have taxable Social Security benefits of $5,500 on line 6B. Your modified adjusted gross income equals $86,500, which is $92,000 of AGI minus $5,500 of taxable Social Security benefits. In line 7, you will subtract line 6 from line 5. In line 8, multiply the figure in line 7 by 50%. Do not enter more than $25,000. If you are married filing separately, do not enter more than $12,500. as long as you and your spouse lived apart at all times during the tax year. And on line 9, you will enter the smaller of the figure on line 4 or the figure of line 8. In part 3, whether you came here directly from line 3 or if you completed part 2, you will eventually come to part 3, total losses allowed. In line 10, you will add the income, if any, on lines 1A, 2A, and you will enter the total on line 10. For line 11, you'll enter the total losses allowed from all passive activities for 2022. This is arrived at by adding lines 9 and 10. More detail is contained in the form instructions. But you can use parts 4 through 9 of Form 8582 and the related instructions to figure the unallowed loss to be carried forward and the allowed loss to report on your forms and schedules for 2022. In Part 6, you will complete this if any amount is shown on Part 2, line 9. Which is this number right here. In that case, you'll enter the name of the activity, the form or schedule, and the line number to be reported on, the loss in column A, the ratio in column B, special allowance in column C, and then in column D, you'll subtract column C from column A. You will use Part 6 to calculate the allowance on Part 2, line 9 of Form 8582 amongst your rental real estate activities. If you use the worksheet and the instructions for line 9 to apply any remaining special allowance to prior year unallowed CRD from one or more rental real estate activities, you will need to complete a separate Part 6 to allocate that portion. For more guidance, please see the form instructions. Part 7 contains unallocated losses. You will complete Part 7 if any activities have an overall loss in column E of Part 5 or losses in column D of Part 6. In any prior year unallowed CRD included in Part 1, line 3, if you did not have to complete Part 6. In Part 7, you'll include the name of the activity, the form or schedule, and the line number to be reported on. And then in column A, you will enter the amounts, if any, from column D of Part 6, which is derived from column E of Part 4, in any prior year unallowed CRD included in Part 1, line 3, if you did not have to complete Part 6. You'll also enter any losses from Part 5, column E. In column B, you'll divide each of these individual losses in column A by the total of all losses in column A and enter this ratio for each activity in column B. The total of all ratios must equal 1. For column C, you will multiply the ratio in column B by the dollar amount of the loss in column A enter this into column C. For Part 8, this contains your allowed losses, and you will use Part 8 and Part 9 to figure your allowed and unallowed losses for each activity. If you have losses from any activity that are reported on 2 different forms or schedules or more, you will use Part 9 instead of Part 8 for that activity. In Part 8, you will use this for any activity listed in Part 7 if all of the loss from that activity is reported on one form or schedule and no transactions need to be separately identified. So you'll enter the name of the activity, the form and schedule and line number, the loss, the unallowed loss, and then the allowed loss. So for column A, you'll enter the net loss plus the prior year unallowed loss for the activity, which you will figure by adding columns B and C of parts 4 and 5 and any prior year unallowed CRD included in Part 1, line 3. For column B, for each activity entered in Part 8, you will enter the amount from column C of Part 7 for the activity. These are your unallowed losses for the tax year. Keep a record of these amounts so they can be used to determine your passive activity loss in future years. And then column C is column A minus column B, results in your allowed loss. For Part 9, activities with losses reported on 2 or more forms and schedules. You will use this section for any activity listed in Part 7 with losses reported on 2 or more different forms and schedules, or that are identified separately on the same form or schedule. For example, 28% rate and non-28% rate capital losses reported on Form 8949. Only losses that would cause a difference in tax liability if they were reported on a different form or schedule or identified separately are kept separate. Those forms, schedules, and parts are the following. 1. Schedules C, E, and F. 2. Form 8949, Parts 1 and 2. 28% rate losses and non-28% rate losses. You must generally make a separate entry in Form 8949, Part 1 or Part 2 for each transaction reported. And Forms 4684, Section B, 4797, Parts 1 and 2, and 4835. You will use a separate copy of Part 9 for each activity for which you have losses reported on 2 or more different forms or schedules, or which are identified separately on the same form or schedule. So you'll list the name of the activity at the top of Part 9. In line 1A or column A, you'll enter the net loss plus any prior year unallowed loss from the activity that's reported on the same form, or in the case of Form 4797 and Form 8949, the same part. If you have a Form 8949 with 28% rate loss and a non-28% rate loss, please see the form instructions for an example before completing Part 9. In line B, column A, you'll enter any net income from the activity on the same form or schedule. In column B, you will subtract line 1B, column A, from line 1A, column A, and enter the result in column B. If line 1B, column A is more than line 1A, column A, enter 0 instead. In column C, you'll divide each of the losses in column B by the total of column B and enter the ratio in column C. The total of this column must be 1.00. Column D, you'll multiply the unallowed loss for this activity found in Part 7, Column C, by each ratio in Column C of Part 9. In Column E, you will subtract the amount in Column D from the loss entered on line 1A, Column A. This amount is the loss allowed for the tax year under passive loss rules. You will report the amounts in this column on the forms and schedules normally used, subject to further limitations as described in the form instructions. As you can see in Part 9, there is more than one line 1A, 1B, and 1C. So if you need to report this for the same activity from one form, then a second form, then a third form, Part 9 allows you to accommodate up to 3 forms or schedules and line numbers. And you'll need to include a separate Part 9 for each activity that has losses reported on 2 or more forms or schedules. This concludes our review of Form 8582, Passive Activity Losses. For more detailed guidance, we've written a complete article which you can find on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 8582 in the search bar, and you should see our article. If you like our videos, please subscribe to our YouTube channel. If you like our articles, please subscribe to our newsletter. If you have any questions, comments, or concerns, as always, please post them in the comments section. Thank you.